Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 6th, the year's 2020. Let's talk trading. Time for the weekly wrap up. Just to let you know, these videos are for educational purposes only, and your results may differ from mine. As we look at the week, we can see that the pound has broken both the previous week's high and low, so we now have an outside bar. And it's 59 pips above the previous week's high. All the gaps have filled. And if you take a look here at the distance between the different pairs close and opens, you can see a lot of them are hundreds of pips. So if you trade the weekly open cross, for example, you can see on the pound, for example, you'd be up over 200 pips. So price made a low, crossed above the open, and continued up. And you can see here 218 pips above that open. So those traders that always seem to want to, say, how can I trade? I've got a job, but I want to make lots of money, hundreds of pips, blah, blah, blah. Well, maybe taking the weekly open crossover might be another trade you can consider, considering if you can have a stop loss that allows price to swing. As you can see here, there's money to be made. Looking at price once again, this is the opening range for the year, first day of the year. And here's first day of the week. Remember, the first day of the week and the month are the same, so that's why we only show one here. And price has crossed over crossed over the low of the opening range and into that opening range. You can see here, it opened here, crossed below, crossed back above. Once again, simple horizontal line cross trade. And the funny thing is about trading, we've been talking about cold hard truths for the past couple of weeks. When you pick a level to enter at, I don't care how you got to that level is just a horizontal line cross. $112 pips below the yearly open. Depending on who wins the election, you might see price make a new high, or you might see price stay below the yearly open. I don't think it would make a yearly low. I could be wrong, but like I said, once again, depends on who wins the U.S. presidential election. Yesterday, shot out of the daily inside bar, shot out of the weekly inside bar, good for 128 pips. Once again, simple horizontal line trades. You can trade one, you can trade a few, you can trade them all. Just make sure your stop loss is in place. Your risk management is in place on each and every trade you enter. Today's range, you can see, pretty anemic. We've got 4 pairs over 100, pound only 64. It's just oscillating back and forth. As far as the buy zone goes, we had the pivot point. Price has not hit the pivot today. If you were using the pivot as a bias, you would have taken nothing but short trades. And you can see here, there were wins on these short trades. As far as the rat zone, I'm showing M15 right here, the candles. And as you can see, just trading, putting a short in here, putting a long in here, would have paid off. We've only got 64 pips of range, so approximately 24 pips between here and here. You can see where the smart rat is, just below the regular rat by about, less than 2 pips. And this one is just above, just by over a pip. And for those of you who aren't familiar with the rat zone, simple explanation: price moves. Usually at the end of the day, it winds up between the two rat zones. So that's why we don't know where the current daily high and current daily low are going to end up. We just trade what we see. So here it put in a new current daily low, came back out of that zone, back to the north. We just take those trades. Any trade in here would be considered a valid green rat trade. Any trade in here would be considered a valid red rat trade. The entry is not as important as the area you enter. Once again, miss the pivot. Here we can see we missed the daily pivot, but we did take out the weekly pivot. Earlier in the week that happened. So anybody trading the weekly pivot, once again, those people who want to make money trading, but they don't want to sit down or they can't sit down and watch, this is an opportunity. You just have to figure out your risk management. Wick zone, in and out of that upper wick zone. Once again, taking some shorts here would have paid off. The longs, not so much. And the range really compressed at the moment. 64 pip range on the daily, high minus close 29, close minus low 35, showing that the rats once again are getting fat off of cheese. High minus open though is only 16 pips. Open minus low 48, but still enough money to make pips and place them in your portfolio. Just looking here at one of the trading screens. Right here we saw a 3-ball at the top. If you took the break of that low right here on the M1, it would have paid off by what, 6-7 pips at the or more. Let's see, I can actually do that. Break of the low down here. What's that look like? About 11. You probably could have made 10 pips here. Just taking it simple trade. You can see we don't have much on the day for the range, but that last hour we had 58 pip range right here. So you can see using the sweet spots gold, just candle color at the line is just paying off. The wall mall trade, and I was talking to Wall yesterday, and we might revisit the wall mall method because we've been talking about, you know, the cold hard truths, but I know there's traders out there just chomping at the bit. You know, they just want to get in here and trade, and they're not really concerned all that much about the psychology. And I think that might be one of the cold hard truths, that if you're not paying attention to your brain management, then chances are that's money management, brain management. If you're not paying attention to these things and you don't have them under control, chances are you're going to experience a lot of pain, because you're going to second guess yourself. You're not going to get in trades. You're not going to get out of trades. You're going to be basically a mess. And as Walmart stated, you know, you have to have a plan. You have to know what you're going to do ahead of time. So you're not thinking, you're reacting, you're executing. It's like in football or basketball or any other sport. You pretty much know ahead of time. You have a game plan, and you go out and you execute that plan. And depending on what's happening on the field, you might have to change that plan. Like, you know, we're in football season. You're playing, if you're on offense and your running game just isn't going good at the moment, then you have to open up and you switch over to your passing game. Then if your passing game starts to work, then maybe you can start to bring the running game back in. But, you know, maybe they've got something that you weren't expecting, something unexpected comes up and they're stopping your plan. Well, hopefully you have a plan B that says, if they do this, then I'm going to do that. That's why you see those coaches on the side of the field with those laminated sheets that are highlighted in a bunch of different colors. So when certain situations come up in the game, they've already figured it out ahead of time. They go, okay, this is what's going on. This is what I need to do. So for example, today, it's obvious what the market's doing. It's range bound. It's not moving that much. So what do? You take trades. You're going to be taking reversal trades. You're going to look for the semaphores, and you're going to look for maybe an H1 green at the line long, H1 red at the line short, and you can see here there's tens of pips to be made here, especially during the London, New York session. Of course, your results may differ from mine, but we're going to look at the chart here, and that's what it's doing. You don't need any fancy squiggly line indicators to tell you what to do. You can let price tell you what to do. It's very, very simple, but people have a habit of complicating things. I don't know why. I guess it's part of human nature. I guess people don't like simple. They say they do, but they really don't, based on results and empirical evidence. So that's pretty much it for the week. We might see price do this the next couple of days unless something happens over the next few days where they get this presidential election settled. I don't see that happening anytime in the near future. So in the meantime, you just have to trade what you see, react to it. One thing though, you better be careful. In times like these, it's really best to take quick pips off the table because price could swing against you 20, 30, 40 pips in a blink of an eye. And you don't want that to happen. So if price is going your way and it stalls, you better get out because that next tick could be, the last tick that, or actually the next tick could be that last tick you'll see that just takes you out. And you don't want that to happen. You really don't. It's one way to mess up a really good trading day. You could be up 10 or 20 pips for the day. Hop in a trade, you're up a couple more pips, you're fat and happy. Next thing you know, boom, price rockets down. You don't want to see that happen. You really don't. In fact, I'm not sure. I'll try and load up an M1 chart here. And let's just see if we've seen any of those. I mean, it doesn't even have to be 20 pips. It could be a 5 or 10 pip move that could really hurt, depending on your level, your lot size. I mean, if you're trading $100 a pip at 10 pip moves, that could take $1,000 right out of your account. And for some strange reason, computer's freezing up on me. I'm going to pause it for a sec. Okay, computer, I just had to calculate a bunch of stuff. I don't know why this i3 is running like this. Might have to switch over to my i5. Anyway, as you can see, there were some nice moves here, but right there in a minute, you could have lost over 10 pips. So, fellow traders, I hope you have a profitable week. I hope you have a fun and safe weekend. And when you come back and sit down at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.